Hello, everyone. Happy Sunday. Simon is here with AvaTrade, and we're returning to our weekly trading plan webinar. I hope you had a great week with good results. And did you enjoy your weekend and getting energy for the upcoming week? I want to welcome those of you that this is your first time attending the webinar, and I will explain in a few words what's happening here. Basically, the idea, and I like to quote it all the time, it started from the idea of whoever said it, I'm quoting, plan your trade and then trade your plan. And that's something that's been working for me for the past 21 years and for people that I help through all these years. And the purpose of this webinar is really to look through possible trading scenarios and have a plan that really makes sense and something that will help us create organized and structured trading, and it will remove all the junk and garbage from our trading experience. Okay, before we go any further, I would like to read the risk warning, of course, disclosure. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed as or applied as investment advice, a recommendation, or suggestion. CFDs are complex instruments and come with high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take high risk of losing your money. You can find a full disclosure at avatrade.com official website. Also, I'd like to mention that you can follow us at Twitter and, of course, YouTube. Our YouTube channel of AvaTrade is full of amazing recorded information that includes tutorials and webinars on fundamental analysis, technical analysis, and other things. Okay, so I will switch now the screen to the MT4 platform. This is the platform we'll be using to go through trading instruments and trying to make sense of what possible could be happening the upcoming week. And before we do that, I'd like to quickly mention or remind everyone how important it is to be aware of upcoming events and announcements as far as the economic calendar. And it's good to do at the beginning of the week. You can mark them. You can even do reminders, or you can just write them on a piece of paper, or you can just apply them to the instruments that you trade. And you can also disregard them if they don't make any sense. Let's say if you're not trading Japanese yen or anything to do with Japan, you might not be interested in what's happening there as far as announcements and economic numbers. So let's just browse through it really quickly. You can use economic calendar on many websites, including our web trader. There's a lot of resources. So on Monday we have durable goods orders from the U.S., which is a series numbers. We have Bank of Japan monetary policy meeting minutes. That's also important for the yen and Japanese economy, of course. We have retail sales coming out from Australia. That's Monday. Tuesday, we have nothing much serious. Then on Wednesday, we have manufacturing PMI and non-manufacturing PMI from China, which is important. We have GDP, which is gross domestic product from UK. It's very important as well. It shows how economy is doing. And we have from European Union, we have CPI, the Consumer Price Index. The inflation situation will be shown. Then on Thursday, we have GDP from US. Also, it's good to follow up. We have retail sales from Germany, will be affecting DAX, European indices. And Friday, we have manufacturing PMI from US and Michigan Consumer Sentiment Index. So Friday, some US US figures are coming out, so we'll be watching. Now, so this is the economic calendar. Now, in general, what's out there fundamentally, there's still an issue that we mentioned last week with debt ceiling. There's still arguments going on, and there's still thoughts that the government at some point will be shut down. There won't be any cash available. Now they say it's going to be possibly mid-October to November, so on. It's been changing. It's been a very dynamic discussion there. And China, the issue with this real estate development firm and possible bankruptcy, the issue is still there, and we'll be talking about it, how it actually affects some banking stocks last week. We'll show that. And FOMC last week, I just want to bring that to your attention for those of you that you followed up. Basically, it was followed by a press conference, and the picture is the following: that they indicated that tapering will start possibly in November. And then also another thing on the interest rate increase, some saying that the first increase, or at least one increase, will be happening next year, 2022. Before that, they were expecting something not earlier than 2023. So it's kind of it's bringing a possible interest rate increase closer or sooner. Okay, so that's the fundamentals. Let's see what we can make out of it, and we'll look at a few instruments. And for those of you that come every week, I chose to open a clean chart without any previous levels, because they became the chart got really filled with a lot of levels. So it's also good for new people. We'll figure it out how and what would be the way to figure out the levels and how we can use them. So it would be good and beneficial to everybody. So another thing, I'm going to start a little bit unusual today. What I would like to start with is with cryptos. China announced they've been very aggressive lately. They just do whatever they like to do. A lot of things on my mind, but I'm not gonna voice it out. So they made it illegal. Any transactions in cryptocurrencies are banned in China. Anything, buying, selling, using, whatever it is. And let's take a look at Bitcoin, how it really reacted last week. It was a big sell-off. We actually went before 40, below 40. I'm sorry. That was on the 21st, and it's been struggling. And now we're trading around 42,000, and it's a big pressure. There's a lot of people in China. They have power, and Ethereum, of course, the same thing. So we'll see how things will develop. Remember, the first fall recently happened when El Salvador, the first country accepting it as a currency, then they just backed out, and that was the selling on. I think this was the 2 weeks ago, and now we had China banning it. So it's not looking good for Bitcoin. We're far from the previous support. This is the weekly chart in 30,000s, but we could slide back down there and see if that holds. Okay, that's a big announcement. So we get the cryptos out of the way and we move on. So I would like to bring. We'll start also with we'll go through commodities. I'll start with metals. Take a look at gold. Last week we said that the BlackRock, the manager said they pretty much got rid of gold. They almost or not holding any gold. And last week there was a two strong sell-offs, and last week was also a down week. Let's take a look on the daily chart. Thursday was a big sell-off, and then Friday we tried to bounce, but we couldn't. So we'll be watching gold the upcoming week, and the level to watch is probably the first drop here, the low of this bar or candle. 1745, let's say 1745 is the level. It looks like we're holding it. We had a few tails, failed breakdowns, and we're closing higher. So we could bounce a little bit over here. And again, if I remember correctly, I mentioned last week that also with the shutdown of the U.S. government or possibility of a shutdown, that would be positive for gold. Maybe that's the reason gold is holding here. So it looks like it's found its support 1745 at least for now. So again, we cannot guess, we cannot say that this is the scenario, but it's very simple. If we're holding, there's a possibility of going high. If we dip below 1745 and we close below, that opens a way of gold sliding lower to 1700, 1650s, and so on. So we'll be watching gold this week. Palladium. Oh, let me check. Palladium or platinum I was watching last week. Just 1 second. Palladium. Palladium was really selling off. I'll bring the chart that I had my levels on it. Yes. Palladium, it hit the support of 1833 and bounced. And that's happened in the beginning of the week. So, and that's, I just want to bring it to your attention. Why is it important to have levels and have a plan? Because if someone had the plan and had this level, and just explain how it was based on the previous levels of support from which we start really going higher. It hit the level. So just a scenario, if someone had a limit buy order there and stop it at some point below it, I just want to figure out. It was 1833, the level, and the low was 1826. It's only seven. It just spiked down $7 lower, and then it came nicely high and made about $120 move, $150 move. So just to show you how great it is for the swing traders or any traders to know the levels and place the orders, or at least watching certain things at certain levels and see how they behave. Okay, so that was palladium. Copper. We spoke about copper, and I'm going to go back because I really like my old levels anyway. So we spoke about copper. We said that the level 1833 could be, I went to palladium again, sorry. We said the level 4.12 would be possible support here, and take a look on the daily chart how it looked. We stopped at that level. The following day we had a huge dip below it, and the next 3 days we went high and we stopped at 20 moving average. Again, knowing the levels. Now, what's next on copper? We came again to the level of resistance here, and take a look with the spikes. We'll see what happens. And as I mentioned, there's some news from China coming out will possibly affect the copper in some way. And it looks like this 427.90, 428 level. This is a 4-hour chart. It's having a hard time breaking it. So if we start closing higher and building up some price action to the buy side, it could continue higher. And if the opposite happens, we start closing below it and showing some weakness, it could be a possibility we go and retest lower levels here. So that's as far as metals. So next thing, I want to bring natural gas. Take a look at natural gas. Let's see the old chart if it helps us. Natural gas, it's very interesting. It built a support here at 472, and we had 3 days we couldn't break this level, and the last 2 days of the week we went higher. Thursday was a very strong day, just crossed the previous 2 days of losses. We closed the gap and we went higher. So it looks very strong here. There's a possibility they could continue after this a nice profit taking. We hit 20 moving average when the way high. So there's a possibility of natural gas going higher here. So let's take a look on the 4-hour chart. What could be a possible scenario? We'll have to watch in case it decides to go higher. The 535 level would be an interesting level to watch how it's handling it. Is going to stop and bounce, because from here we made kind of a lower low, so there's a possibility that around this level will be a lot of resistance. So we could play a resistance level here, which could be a possible selling short scenario. Or if we break higher and then retest it and hold this level, so it becomes a support and it opens um, space for the move high here. Okay. Crude oil. Crude oil has been strong lately. We said it, and then we came to this level of resistance around 74.33. Let's take a look here on the daily chart. This was the previous level. The high was here 74.22, and the Friday's high was 74.25. Okay, it went 3 cents higher. It confirmed this, you could say, double top from this level, and then we closed about 30 cents lower. So again, next week we might retest it and bounce back, searching some support, or if we break through it and start closing it, it's going to be some price action to the upside. We could continue higher, and psychologically probably 75, 75.50, 76. And if you look on the weekly chart, on the monthly chart, looks very interesting. Actually, the monthly chart was very strong, and I'll explain why. There was a lot of actions here around this level, and this is a key level where we are now, 74.20, 24, 74 and a quarter, let's say. So there's a lot of actions here. This is monthly, so take a look. We had a year, 12 months, really drilling this level, up and down, up and down, up and down. It was a huge accumulation happening. And then we went higher, and this was 2011. Then we came back to the level, we almost confirmed it, and then we kind of playing around in a huge range for a while, from 74 to 112, 115. Then this was 2014. Oil just sold really hard, no bounces, straight for 3, 4, 5, 6, 7, 8 months straight. And then we came to this level here. And what I'm doing now is actually something that every trader should be doing. You need to understand the dynamics, where the price is coming from, and what could be a potential move. So that's why I'm trying to explain the way I look at things. And it could be oil or anything else. I try to understand what's happening. So again, accumulation, a huge move up, and then we had the sell-off. We stopped at 43.63. There was a lot of weakness here, and then we established a very, very strong support with some accumulation here. And take a look. From this accumulation, we went, there was a lot of accumulation, but it wasn't enough to break this level again. So this level here was a very, very strong resistance, 74 and a quarter. Then we came in 3 months straight down in the channel, So this was the range between 43.60 to 74.25. Then we made a lower high around here, and that was a bearish sign because the moment we hit that level, we sold out crazy. Okay, and again, this of course, we're talking about the beginning of the corona at that time, the pandemic, the COVID, and then we went at some point to negative, and then we came back really aggressively from a negative zone, that which is funny anyway, and we broke straight through it. And take a look what happened with a small break here, 1 month break, and we went straight to 74.25, but we still held that. You see, we had the spike here in July. The high was 76, almost 77, 76.96, but we closed right on the levels. Very, very strong level. But take a look. Then we had last month, we had a sell-off, but we holding this small, tight, very, very tight range. And now we are glued to the level on the up month. And the weekly chart, take a look. So this is very crucial. There's a lot of orders here, so, and probably stops as well around here within this probably half a dollar to a dollar range. So there's also a possibility that all these stops are going to trigger a move up, something like something that happened over here. It could be happening. So it's a very strong pressure to the upside. So if we do break it, and that impulse can continue, we don't know when. So it's very, very, very interesting to watch oil at these levels. Okay, we are testing it. We're testing it. We had a huge sell-off. This is back to daily chart, and then we are coming back to retest it. Of course, the opposite could happen. They can get they run out of steam, and then we can just slide back to certain levels. It could be even to the bottom of this channel, to the 66.5 or 66 levels. So oil is very, very crucial here. Okay, so let's take a look. We're already in the oil related stocks. ExxonMobil, take a look. We had a very strong week after the gap down. We went and we broke on the weekly. You can see it easily. Take a look. We had a sell-off for 4 or 5 weeks, and then 1 week, which was last week, just crossed it out. So we back to 57 area, and Chevron, similar idea. Also, the previous losses are erased, so something to watch. Let's take a look quickly at soft commodities, and then we'll be done with commodities in general. So I'll bring the old chart because we had our picture there. As far as corn, daily chart, we said the head and shoulder. It was on the way to working, and then we came back trying to re-enter this area here, 527, 528. We're having a hard time. So we're still in this scenario, possible scenario of continuation down on a head and shoulder formation, or it could be broken. Not every head and shoulder is working, so we can enter into a buy area and continue higher. Everything is possible. The same thing in soybeans. Soybeans actually are a little bit far from this neckline of 1298. And wheat has been very strong. It had a strong week, and we're coming to a resistance of 726, possible resistance there. So we're done with commodities, and let's take a look at indices. Again, we'll try to see what happened with the announcement of the Fed. Okay, so this is Friday, Thursday, Wednesday. Announcement happened on Wednesday. Let's see. Wednesday was the 22nd. Okay, so The market's been strong since the announcement. Let's bring in 1 hour chart. We sold out, and then we moved strongly. This is 1 hour chart. Just want to show you the dynamics. It was a big sell-off from 44.56 all the way to 42.97. It's about 4 or 5% move, and then we start recovering, and then we came back to the level from which the fall started around 44.57, and we had another pullback and coming back. So it looks very strong. And let's take a look on the daily chart. I'll bring the clean chart again. So we'll try to make some sense out of it. Let's take a look at the 4 hour chart. On the weekly, take a look. We had two selling weeks, and this was a very strong sell, but then we came higher. So that's really bullish there. After all the sell, the optimism actually prevailed and buyers took it higher. It was a tremendous move. Take a look. The last 2 days we went higher, and we're holding here. So should they take the markets higher? The 44.70, 44.80 area right here would be a resistance. So this is the level that we couldn't break for quite a few days, and then we sold out from here. So it's going to be a lot of limit sell orders here probably. And so if the market will try to bounce and retest this level, it will be hard to break it, at least to break it in a fast manner. So it will be a fight around this 44.70, 44.80 area. So we'll be watching this week what happens next, and of course fundamentally what's happening with this Chinese company, and in general what's happening in the market. So this is the S&P 500. Dow Jones, similar idea. Nasdaq, similar idea, where the bounce it was sitting. Let's take a look at FTSE. FTSE actually the last day sold out. It's a lot of choppy trading here. DAX, we spoke about the DAX, was actually changed to DAX 40, and they added 10 more companies, and that was announced on Monday. And take a look on DAX. This was the level that we couldn't break, around 15,775, and we retested it a few times, and then with the sell-off we came and confirmed this level of support, the previous support. We dipped a little bit below, and then we went higher. So now we have actually a clear picture as far as the range. We're between 15,775 and 15,000, let's say 15,031. So it gives us the ability for those that like to trade the ranges. You could be selling the highs. I know it sounds very simple. It's not that easy, but it is simple in a way. Selling the highs that take some profits at some points, like at this tails right here. So far, every attempt, recent attempt to break this level, we went lower. And the same thing, we'll get closer to support here at around 15,000 would be possible buying opportunity, as this channel is really clear right now. Let's take it Nifty. Nifty made new highs, as we said, the champion and Nifty 50, the Indian champion, is making new highs. Unbelievable. I have no comments. It's hard to short it because when you short, your losses are unlimited. This is the trick with shorting, and buying at these highs is also a little bit scary because there are some pullbacks that you can get caught in. So we'll be watching. So that's as far as indices. And let's take a look at dollar index. Dollar index had a strong week, with the 3 week in a row we are on the way higher. The only thing that we still have a hard time breaking this level here, which was 93,455. Okay, this last week we broke it a little bit by 5 cents or so, but we didn't close higher. So it looks like we have a double or even triple tops, 1, 2, 3, which could lead to a little bit of pullback on US dollar. Let's bring 4-hour chart. We'll see it a little bit clearer. We came down from these levels, we came back, retested it, and we're holding so far. So if we should go lower, we will be watching these levels here. So again, here also we have a nice channel in the 4-hour chart between, let's say 93.50 and 92.94, 92.95. So close to those levels could be possible trading opportunities, either buying, hoping it's going to go higher, or selling at the top and taking some profits on the way down. And of course, if we decide to come out of this channel, either up or down, that it's going to start trending that way, either higher or lower. So let's take a look at some currencies. And something that I want to bring to your attention, it's very interesting. GBP CAD, I think last week I mentioned it. I just want to show you how levels really work. The same as we spoke about the levels. Take a look. This happened, this level right here, it happened on April 20th. And we had a retest here with the spike. This is a daily chart. And this week we had the same thing. And it actually happened on Monday. We did reach that level. And take a look how beautiful it is with the limit order at 75.84, and at some point having a stop 20, 30, 50 pips, whatever it's appropriate for your trading style. It could be a very, very nice scenario, even if you had a 50 pip stop here, let's say, for instance. So you're risking 50 pips. And the move from here, of course, yeah, easy to say you would have made the whole, you wouldn't take the whole thing. You probably bail out somewhere here. But even if that's the case, so that's 150 pips profit to 50 pips risk. So it's 3 to 1 at least. Of course, if you still, if you would be still in, it's a huge profit here. But what I'm just saying, it's important to have a plan, and then you set up the levels. You could even put alerts there, or you can just watch it manually and pay attention to that. It's very, very interesting how things work, and levels do work. They're never perfect. Sometimes they actually to the pip, but of course you have spikes and everything else. But it's really a good way of having your trading structured. Okay, so USD CAD. USD CAD was selling off, even though the dollar was strong, but oil was very strong last week, as we said. And take a look, it was a huge sell-off on Thursday in USD CAD because of oil. So something to watch also. If oil continues going lower, I'm sorry, if oil continues to climbing higher and the dollar will have a little bit of pullback, this move can continue, and we could possibly go and retest the previous levels around 25.20, 25, which is about 150 pips potential from here. It could be possible. Okay, on the upside, these levels around 28, 28.30, this area is a resistance. The same thing, it looks like we're having a little bit of a channel here. We're right in the middle now. Okay, so if we continue, we can go and retest here. If we continue higher, we can retest 28.30. This is USD CAD. Let's take a look at USD ZAR at the very strong bounce. We spoke about it last week. We had a strong week last week. It was a beautiful bounce, actually, for those of you, again, speaking of levels. I'm just going to redraw new chart here. We spoke about it. There was a lot of actions here and a lot of actions here, and then we bounce very nicely. Okay, and take a look. You can use this, even this spike as a level, and we did hit that, and we bounce right here. Take a look how they repeat themselves. You have a lot of actions here, a lot of resistance. Retested here, failed to go higher. Here we had the move, but we came in immediately after that and made a new low, intermediate low, and then we retested it again. So it's a nice channel here. And again, if the dollar pulls in this week, we could see a bounce from here that we saw and going lower, looking at some level of support. And we could draw the level of the previous resistance here as a possible support around 1450, 1460 area. And this is USD ZAR. USD CHF had a weak week, and actually Swiss franc was very strong last week, even though there was no change. Remember we mentioned that Switzerland was one of the countries for the announcement of the interest rate, and they didn't change anything, but into the announcement and the whole week, Swiss franc was very strong. So you could see how the whole week was to the downside on USD Swiss. So that's as far as currencies. Another thing I really want to bring to your attention, it's USD Japanese yen. We entering also very serious levels here, and I'm just gonna draw. So from here we made a lower low. We had a lot of actions here. We almost confirmed it here, and then we confirmed it here, and then we're back to this level. So this 110.70, 110.80 area, it could be a strong resistance. It looks like it. Also, where the three consecutive moves up on the high candles. So this could be a possible, at least for now, a little bit of a break and correction to the downside. And also we have a very nice channel here between 109.11 and 110.72. It's about 160 pips, a nice corridor here. So it could be great opportunities within this range. And take a look, 4-hour chart is very bullish, went vertical up, vertical. So if you pull back down below 110.72, we could see a little bit of a correction, would give us some opportunities on the short side, and at some point we could see some buying opportunities as well. So this is out of all the currencies, the major currencies, I think this looks very nice potential for trading, either on the breakout going higher, or another scenario which could be more likely. Again, depends what dollar is doing, and we could have a nice correction to the downside. So that's as far as Forex. And let's bring some stocks and a few things that we mentioned. So with this Chinese giant that is on the edge of bankruptcy, financial stocks really sold out, but they did recover afterwards. So we had a gap down on Goldman Sachs, and then we came, covered the gap. Okay, so something to watch. If we should go higher, probably have a hard time breaking these levels, 392, 392 and a half. We could see another pullback if that threat gets more actual or more real on the bankruptcy, because it's company doing real estate development all over the world, and of course they are borrowing the money from the banks, and the banks are involved. So this is Goldman Sachs possible resistance here, 392, with this scenario of moving lower. JP Morgan, similar idea. Stock is also facing a resistance here after a strong move, a little bit of a recovery. It's actually a nice recovery from 151 to 163 area. So also this level could be a strong resistance. So we have a potential of moving lower here and retesting supports. possible 153, 150 area here. And Citigroup, same idea. All three stocks facing resistance that previously was hard to break. There was a support here, from which we made new high. We came ahead, again, try to understand the dynamics. We came from here, new high, we went straight back down, and then we confirmed that the previous support is not there anymore. It became a resistance. We channeled for a while. Then we came, retested the previous levels. And again, a lot of action around the 71.25. So we're back to that level after a recent sell-off. So a possible scenario that we'll have a hard time breaking it, and it will slide lower, and gives us opportunity about $5, $4 to $5 profit here on Citigroup. Now, as far as the news, Tesla had great news. What they announced, I think on Friday, which is reflected on the chart. They announced the new beta button, something to do with self-driving for the cars, and that was accepted with a lot of excitement by shareholders. And Friday was a very nice move. We went from 743 to 773, about $30. It's a very nice move. And what's more important, we broke out of the resistance of 763, and the next point of reference is the previous resistance right here, from which was sold out. So the high here was 780, we about $7. Okay, 1% move on Tesla on Monday, if it's possible, would either confirm this resistance or it would break out of it, which is also possible. So we are at 779.80. Let's say 780 is a serious level that Tesla needs to test. Either will break that level and go higher, or it will bounce back down from there. So that's Tesla. And let's take a look quickly at a few stocks, major stocks. Apple. Remember the story with Apple? It's been, we spoke about it's coming back below 150, and now it's trying to recover after this recent gap down. And let's see what this week brings in general to the market and to Apple. Microsoft, also, most of the tags, they closed the gap of beginning of the week. Google, same idea. So Facebook, okay, we'll finish with Facebook. Facebook, the chief technology officer, the one who's in charge of technology, he left the company. And Facebook really sold out this past week, and Friday was a little bit of a recovery there. They didn't take it well, the announcement. Of course, if somebody of that caliber leaves the company, it doesn't look good. So Facebook was really selling off hardly with the gaps. Okay, so that's it pretty much. We'll be watching new developments as far as this Chinese giant and the debt ceiling from US and few announcements that we said. And I wish everyone an amazing week, a week with profits and with learnings and improvements. And stay well, stay safe, and all the best. We'll follow up the following week. Take care.